Hey guys, this is a market update. In this video, regulatory FUD is trying to push us lower again. We also have a CPI figure, which is going to dictate where we go from this support level. We have some Bitcoin on-chain data as well that is showing us a real change in trend on the on-chain data, which is important for long-term investors. So I'll cover that as well. Timestamps for everything down below. Bitcoin is right at this support level, and it is actually a key support level right here at 22,500. Now, this on the chart right here on the 14th of February is a latest CPI figure. This is the latest inflation figure, and I think this figure alone is going to drive us either to one of two places. Either if it's a bad result, we're going to obviously come down to the next support level around 21,500, so $1,000 off the price there. If it comes in below expectations, or even I think that could actually see us jump up to this next resistance level around 24,500 because of what's happening on the on-chain data. This is not an anomaly. This happened for a reason, and it's because the on-chain is starting to change right here. And I'll cover that throughout the rest of this video. In terms of CPI, you can see 6.5% was the last number, and the forecasters have it coming in at around 6.3%, so a small drop. Now, the drops are going to be getting lower, like the actual drop from 1 month to the next. As we get down to more normalized levels, you're not going to see huge drop-offs unless there's some crazy recession, but we're not seeing that in a lot of the data. The PMIs from around the world have actually been fairly strong over the last month, and there is some worries that this inflation figure is actually going to start to normalize or tick up again at this level, just because China opening up has sent a kind of inflationary growth wave through the markets and through the economy. And so a lot of people are a little bit worried about this figure, but the forecasters do have it coming in still a little bit lower. Like I said, that number might be a little bit muddy because of the China opening up, sending a growth wave through the markets and a little bit of demand pull from that. So we might see over the next few months, the CPI not playing ball too much, and it may give us some, down days and FUD in the market and maybe coming down a little bit lower. But like I said, if that CPI comes in below expectations, we're going to rally again because the on-chain is telling us that. If you are a trader, get a deposit bonus on Bybit. Come and trade with me on there, up to $4,000 in your futures trading account. Check the link in the description for those details. What has driven the whole market lower over the last 24 hours, though, is regulatory FUD. The SEC are coming out in force and essentially just crashing into the crypto market. And I think it's good to take a step back and understand what they actually can do during this time and how it affects cryptocurrencies you're invested in. Bitcoin, in my opinion, just has a complete pass. Really, everything coming out from the Fed and regulators just says Bitcoin is a commodity, it is what it is, and there's not really much regulation we need around that. The other types of crypto, though, and certainly for the SEC, they're really trying to crack down on staking and yield to retail investors. And we've seen that be a big problem. Now, with staking, it's a little bit crazy because staking is not lending. You're just getting a staking reward from a decentralized blockchain in most cases. But I understand what the Feds are doing here and what the SEC is doing here is they're just trying to crack down on the whole thing because there's obviously a lot of garbage that gets people in with very high yields. But Kraken potentially facing a probe over securities violations, again, offering staking yields to their clients. Now, is staking a security? That has to go through the courts, and that may take years to go through. I don't think it is, because a decentralized blockchain, for me, is not a security, and therefore the validator rewards it pays or not. But lawyers and judges are going to sort this out, not me. Also, we've had Brian Armstrong here, renewed fears that the Feds could clamp down on staking specifically with getting yield from blockchains. Now, what this has done actually has sent shockwaves through the market and essentially sent the whole of crypto lower. As you can see over the past 24 hours, we're just jumping here. But if you can see liquid staking governance tokens. Now, I made a video aptly on liquid staking tokens yesterday. Go and watch yesterday's video if you want to see that. It goes through liquid staking tokens, what they are and how they work. This is a decentralized way to essentially invest in Ethereum, mostly for the most part, and then you get those validator rewards. And so you can see they're all being bid up here. Bad for Kraken and Coinbase, but in terms of decentralized solutions, blockchains are not going to stop paying rewards. Okay, they're decentralized. They can't stop paying rewards, and the SEC and the feds can't stop them doing that. And so a decentralized coin on a decentralized network, these are getting bid up. We've had FUD a lot over the years, and usually crypto just bounces on after a period. You can see Ethereum has really taken this in its stride as well. Still very, very bullish. We have an upgrade, the Shanghai upgrade in March, which unlocks Ethereum from the staking contract. It is, in my opinion, fairly good news. A lot of people said that the Shanghai upgrade, because some Ethereum can get unlocked, may get some selling involved and maybe push the price lower. I actually think it's fairly good news and makes Ethereum more robust and more investable, and a lot of people are going to try and stake their Ethereum because the unlocks are available at that point. I think it's fairly good news. We are still in this rising channel. A lot of people may see this as a bear flag, so actually something that can break down. I don't see that, because we've actually come from we've actually come from within an uptrend. So because we've had this uptrend and now what we're seeing is this kind of melt upwards, I would consider this more like a pennant or an upsloping flag, which are actually have potential to break to the upside. So in terms of technical analysis, I don't think this is majorly bearish, but if we start breaking through this uptrend, that's when it does potentially get bearish and have some downside potential. But for the most part, we're still melting up in this uptrend, looking to take out this 1700 resistance next into kind of 2000. And I think if the Shanghai upgrade goes well in March, they're actual fundamental catalysts that could actually drive us higher. Fundamentally for Ethereum, I think everything is going fantastically. The macro situation, a recession, and FUD from regulators really doesn't help us. So short term, the price can go anywhere and actually break down from this. But if we're seeing fundamentally for Ethereum, things are really healthy, and there is a lot of Ethereum that's being burned from activity, that's fundamentally very good. And so if you're a long-term investor, that's something to obviously focus on. For Bitcoin as well, it looks like the fundamentals have definitely changed positively as well, or at least we're seeing a change from this big bear market drawdown into something that would usually be considered the start of the next phase. So this is unrealized profit and loss. Now, this is taken via spent transactions. So last time Bitcoin was actually spent, it's spent at a certain price and then it stays there. And then where the Bitcoin is spent again, you can get an unrealized profit and loss. So maybe they didn't sell it, but they spent at one price and now the Bitcoin is at another price. And that gives us an unrealized, because it's still in the wallet, profit or loss. During drawdowns, of course, you get an unrealized loss as people are sitting on losses, just having that Bitcoin in the wallet. Huge drawdowns after the price bear markets, right? So we come into this bear market, we see a huge unrealized loss. We see the bear market here, huge unrealized loss, and obviously in the previous one as well, huge unrealized loss. Now the duration of each of these kind of drawdowns, you can see 157 days, 301, 134. If I get myself out of the way, the current one is 166. So 166 is within the same type of cycle duration as previous cycles. We had this drawdown, but as you can see, we've now really come out of this drawdown and we're going back into a new phase. Each of these phases was essentially the end of a bear market. So that's what Glassnode is saying here. It's just a very similar phase to what we've seen before. The on-chain is telling us that. Unrealized profitability momentum, again, you can see when we are down here, that is showing drawdowns, bear market pricing, bear market behavior, lots of unrealized losses here as people just keep hold and hodl their coins. We were down here throughout the entire bear market, as you can see recently, but again, we've broken out of it. And usually when you break out of it, you don't false flag here. You can see previous breakouts, you do get these, rises quite high out. So this again on chain, you do get a couple of false flags here potentially, but after this huge drawdown that we've seen, one of the longest periods of time in this kind of bear market phase or the phase that it isn't growing this profitability, we can see we've just broken out of it here. So again, just another way of saying essentially that bear market drawdown seems to maybe coming to an end. Realized cap hodl waves as well. You can see these cycles. So during cycles of bull markets, you get these short-term holder wealth, short-term holders obviously making a lot of money and then back down and spending again. So each one of these cycle lows, 14%, 13%, 16, and then 12 for this cycle low. If we just get myself out of the way, you can see again, we may have hit a cycle low right here and potentially looking like we are just coming out of it again. Each time we did that before, you can see we climbed out of it significantly into essentially all new all-time highs. But obviously this is a long-term chart. This is months and years that are playing out here. This is not a price chart. This is more a fundamental chart that takes, maybe 2-3 years to play out. There are many data points short term that we just can't predict, like the inflation figures, where it's going to push us, but longer term cycles you can see. So essentially this pink area right here is where long-term holder wealth is increasing, and that is long-term holders and the price is going up. And then during these drawdowns, that's when wealth is transferred to short-term holders because people are selling out, of course. And this blue line spikes up during these periods. And we had one obviously during this bear market drawdown that we've seen over the past 18 months, but we're now coming out of that again. And so during these zones, these pink zones right here, that's when the price of Bitcoin is usually in that consolidation out of a bear market, moving into the bull market, which according to the Bitcoin cycle wouldn't really be happening until next year around the halving. And so an accumulation year, in my opinion. Obviously, we don't know where short-term data is going to drive the price short-term. If you are a trader, get the deposit bonus on Bybit via the link in the description. Come and trade with me on here. Also, the Crypto Investor course has been updated with some new videos. The price is going up at the end of this week, so check that out if you're interested to get the price as it is now before it goes up. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.